Thank you very much for the introduction. So welcome, dear ladies and gentlemen, to my presentation. As mentioned, my name is Alex. I'm head of our longer-term investment themes in the UBS Chief Investment Office. Unfortunately, I'm no medical doctor. I'm just an economist, so please don't expect that I present today the next breakthrough in drugs for longevity. In my presentation, I'd like to speak a little bit about our investment themes at UBS that we present our investors and our clients. And I think there are plenty of opportunities. As a speaker from a bank at a longevity conference, I thought I'd kick off my presentation with two statistics, long-term statistics about the equity market to show you how important it is to identify structural trends to benefit from the winners in your portfolio longer term. I quote two statistics from a publication from last year which looked at the investment performance of 64,000 stocks over a period of 30 years. First of all, the authors found that more than 55% of US stocks and nearly 60% of ex-US stocks have underperformed one of the safest and least volatile investments you can do as a private investor, the 1-month US Treasury bills. That's a pretty disappointing result and outcome when you think about that so many stocks underperform such a safe asset class. But even more interesting was the second statistic, that only 2.4% of companies were responsible for 100% of wealth creation. So it's a pretty limited amount of companies, and ex-US this number goes down to even only 1.4%. When you look at the investment performance in the equity market over the last 20 months, these statistics should come as no surprise, given that two themes have really drove most of the market performance, namely AI, so artificial intelligence, and GLP-1 drugs. And here again, a pretty limited number of stocks. So at UBS in the Chief Investment Office, thematic investing plays a major role in our offering, and therefore I'd like to present you some of our themes and how we approach them. We all know investing with a view to the long term is a challenging task. Therefore, our framework to identify themes contains a few simple but highly predictable drivers that show you basically the pain points across industries and where those pain points foster new innovation and create investment opportunities. We have decided to use population growth, aging, and urbanization in emerging markets. And then we have three influencers: resource scarcity, change in the society, and technological advancement. In total, we have currently 29 longer-term investment themes, and I would say 9 have either direct or indirect exposure to the topic today about longevity. For example, genetic therapies, health tech, medical devices, obesity, oncology, and then certainly also indirect smart mobility, automation, robotics, aging, and comfort. Let's kick off with some more general statistics about the topic of longevity and drivers of this investment theme and why we are all here today. On the left-hand side, probably the most important chart of this event, the development of the increasing longevity and life expectancy that we see worldwide, so a positive development for all of us, and you can see that's a trend that happens across the world. At the same time, however, and that's even more important, is a development that happens that the age group 65 plus is growing 6 times faster than the rest of the population, as you can see on the right-hand side, until end of this decade, and the changes are not changing materially afterwards. By end of this decade, this age group will have a size of around 1 billion people, so quite big size. And this will have a massive impact on the healthcare sector and the topic of longevity in general. Why on the healthcare sector? Let's focus on the left-hand side. Here you can see a chart which shows you the positive correlation between healthcare spend percent of GDP and on the x-axis percent of population older than 65 years. The US, certainly a massive outlier. In the US, for example, healthcare spend per capita have outpaced real GDP growth in each of the past 5 decades. And with the elderly population growing faster than the working age population, there's little chance to expect that this trend will reverse. On the right-hand side, you can see why this correlation holds. That's a study which investigated the healthcare cost of 8 different countries, and what you can see is that the age group 65 plus requires on average 6 times more healthcare costs or causes more healthcare costs than the working age population. Pre-COVID, healthcare costs represented around 9.8% of global GDP in 2021, so during still the COVID pandemic, already 10.3%. As you can see, there's a clear development which goes only in one direction, namely up. Of course, I mentioned already the US, which is in particular massive in terms of investments. Here you see it's approaching 20%, but also due to the demographic changes, other countries are also similarly affected. Unfortunately, and that's the sad story about it, there's a lot of inefficiency in the healthcare system. When you look at a study from the Journal of the American Medical Association, which is widely cited, alone in the year 2019, $760 billion to $935 billion were wasted for unnecessary or low-value care. And here comes our first investment theme, health tech. Health tech certainly will help to solve some of the issues. Here I made one slide with focus on AI. We see 3 angles. Biopharma sector, here most likely the highest return for investors. The healthcare service industry, here most likely the highest impact for us as patients. And on the right-hand side, that's more incremental, to be honest, medical devices, and I will speak about medical devices on the next slide again. But on the biopharma sector, what we hear from companies that use machine learning to enhance their product development, they expect to reduce the development time for new products by half, from 3 to 4 years to 18 to 24 months, and they expect that the success rate of new drugs will increase from 10% to 20 to 30%. In the healthcare service industry, the goal is to get a better and faster diagnosis and to optimize treatment. In imaging, AI is already used, but of course, the blue sky scenario would be that we have a more efficient healthcare system, which means more preventive and more proactive care, and to reduce costs such as admin, fraud, of course, also, and other costs which our governments can't afford in the future anymore. I've mentioned already medical devices, also certainly a topic very strongly related to the topic of longevity. Medical devices address many of healthcare or health underlying issues. In our investment theme, we focus on devices implanted into or worn or carried on the body to treat a medical condition or to improve the quality of life for the patient, for example, cardiovascular devices, orthopedic implants, sports medicine, consumer medical devices, hearing aids, dental implants, and so on. I mean, I made some examples on the right-hand side. 2/3 of hip implants, patients are over 65. Hearing aids, first-time users near 70. So this is really also a topic about longevity, and it should appeal to quality-focused investors. We expect the market size around $140 billion per year, growing mid-single digit. Among the many different categories in the and therapies in the healthcare sector's industry, our analysts believe that obesity and metabolic disease stand out as by far the greatest area of unmet demand and with potentially the biggest impact on longevity, what is our topic today. We know that obesity is the cause for many diseases, diabetes, heart disease, liver, kidney, certain cancers, and so on. On this slide, I'd like to show you what are the reasons for obesity. On the left-hand side, you can see urbanization. United Nations expect until 2050 that 70% of people will live in cities. In general, city jobs are less labor-intensive. We have a more sedentary lifestyle. We have access to restaurants, to fast food, to bars. We walk less to work or from work. So in general, these are some of the reasons. And on the right-hand side, and that's in particular true for emerging markets, we have a growing middle class, which is moving to a Western diet, which means more fat, more sugar, more protein, and in total, more calories. Here you can see the latest statistics from the World Obesity Atlas. In the year 2020, around 14% of the population was obese, which means around 1 billion people. By 2035, they expect already 2 billion people. Or what you can also see is that more than 50% are either overweight or already obese. So that's a big trend. And in our investment theme, we have two angles. A is treatment, and treatment, of course, means, among others, the GLP-1, the new versions of the GLP-1 drugs, and we have seen that a handful of companies have already strongly benefited, but it goes beyond just GLP-1. It's also about prevention, so we also consider fitness products, nutrition. I mean, here are several entrepreneurs in the room in this field, and in general, sportswear. So it's consumer side and it's also the healthcare side. Looking at it from a regional perspective, US certainly most affected, but also other large countries, China, I mean, on a per capita basis, certainly the ratio is not as high as in some Western world countries, but the sheer size of the population, of course, there you have also a lot of people and it's growing strongly. When we look at certain regions like Middle East or Pacific Islands, there the ratios exceed already in certain countries 30%, which should be an alarming signal for us as society, because as mentioned, governments can't afford us longer term in terms of demographic changes, what we all see. Therefore, I'd like to also take a look at some facts about the economic side of longevity. What you can see here is, it's from Swiss Re, published end of last year. That's the saving gaps in different regions, different countries when you enter retirement. And according to the World Economic Forum, in the big economies, you have a savings gap once retired between 8 to 13 years. It is higher in Japan, and it mainly affects women because they live longer. This, combined with strained public finances, means that we need to save ourselves. And that's also one of the topics of our aging and comfort theme, where we basically identify asset gatherers and insurance companies to benefit from this trend. What is the reason why is this gap so big? I mean, A, longevity, we are living longer. B, in the last years, we had low interest rates. That's bad because A, it increased the liability, because as a banker, you always discount basically your liabilities in the future back to today. With a low interest rate, the liabilities increase, and unfortunately, the assets give a lower return. So in sum, you have a bigger delta. Another topic is, of course, demographic change. And here I'd like to draw your attention on the left-hand side, which basically shows you the old age dependency ratio. I take, for example, Europe, that's above there, which we are moving from 3 to 1. So 3 people working, 1 in retirement, to 2 to 1. And as you can imagine, the social systems are already stressed, and they will be very challenged in the future. So big question, what will happen? I mean, we have seen recently China increasing the retirement age for the first time since 50 years. And we have also a lot of discussion in Switzerland what to do, to be honest. On the right-hand side, you can see the case for Switzerland. So entries people starting their working life, and the blue exits, retiring. And here the black bar is basically difference. And what you can see in this decade, we are losing around 140,000 people in the labor market. I mean, of course, immigration supports it, but also another investment topic, very important for us, is automation robotics. Yesterday, the International Federation of Robotics published their annual report. In the report, they showed that we again reached a level of more than 500,000 new installations. 51% of the installations alone went to China. So China is heavily investing in automation and robots. In total, we have around 4.3 billion robots operating worldwide. And this is just the industrial robots. On top of that, you have also the service robots. There, I haven't seen the latest statistic, but what I can tell you, in 2022, we had a growth rate of around 50% in service robots, and there's also medical robots included. So also here a big trend, more automation, CapEx, more investments into robots. On my last slide, I'd like to take a look at the consumer side. So we have discussed the healthcare side, we have discussed the industrial side, the financial sector. On this slide, a little bit on the consumer side, that's also super important, and also here many companies benefit, because the elderly age group is an important and growing consumer. What you can see on the left-hand side is that age group in the US, that's a statistic for the US, 70 plus collectively owns, in the meantime, more than 30% of the wealth, despite the fact they only represent 11% of the population. So they have a lot of spending power. On the right-hand side, it's another statistic from the US Labor Department. So here the age group is 65 years plus, and what you can see, they control already nearly 28% of the spending power in the US. So it's a powerful spender, and they want to spend. So the question is, where do they spend their money? We see personal care, I mean hygienic products, of course medical products, obvious one, but also beauty products. Beauty is a big trend because elderly people spend more on beauty products than younger people. So also here, many companies benefit. Secondly, also nutrition. Medical nutrition, of course, obvious one, but also, I think it's called active nutrition, how our consumer analysts call it, where it's really tailored for the elderly population. And I mean, again, we have several entrepreneurs here in the audience who are active in this field, be it supplements, vitamins, minerals, and so on. With that, I'd like to conclude and remind you, you have seen at the beginning, focus on structured trends to benefit from the long-term winners. Normally, it's not so many companies. Unfortunately, we have seen it, that many even underperformed, let's say, one of the safest asset class worldwide. And I think thematic investing offers a good opportunity to identify these companies, and I think you're here at the right place for such a conference to understand what are the latest trends. With that, I'd like to conclude, and I'm here for Q&A, or we can also do it then after lunch or during lunch. I heard that we have the offering at the Barn Hotel. With that, thank you very much for listening.